Good afternoon. Getting right down to business here. We are doing it live and doing more at 4 weekday afternoons. Mottek On Money live on the air, 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Another big week with the stock market closing higher today. In fact, we've seen a gain for the week. Another volatile week. Investors hoping for a de-escalation with China and the global trade war and the tariffs back and forth. The Dow coming in for a closing gain of 20 points today, ending the week at 40,113. The S&P 500 moving up 40, closing out at 5,525. The NASDAQ jumping 217 points, settling at 17,383. Looks like Tesla had a good week following its earnings news, and the earnings conference this week with Elon Musk saying he's going to be spending more time at Tesla as he wraps up his work in the federal government. All three of the major averages did see 4 winning sessions in a row as of today. This is the longest winning streak we've seen for both the Dow and the S&P 500 since January. Stocks did rack up weekly gains. For the week, the Dow was up 2.5%, the S&P 500 up 4.6%, and the NASDAQ up 6.7%. Big tech stocks moved up today. Investors weighed Google's parent company Alphabet's earnings and also posted a big jump for the week. Wall Street overcoming early weakness today, pushing higher for the 4th session in a row. Looks like the gains today reflect a continuation of the upbeat mood we've seen after President Trump earlier this week said he had no intention of firing the Fed Chairman Jerome Powell. Today we heard from Kevin Warsh, a former Fed governor seen by Wall Street as the front runner, replace the current Fed Chair Jerome Powell if something were to happen sooner rather than later, or when Powell's term expires in about a year or so. Warsh sharply criticized fundamental practices of the Fed. He spoke before a conference at the International Monetary Fund and World Bank meetings in Washington. He said the Fed talks too much, gets too involved in social issues of the day, and lets lawmakers not pay for their excessive spending. A lot of focus on the Fed and tax policy this week. We'll get an update later this hour from Grover Norquist, the president of Americans for Tax Reform, and Ted Rossman, senior industry analyst at Bankrate.com. But first, joining us now, the one and only Steve Forbes, chairman and editor-in-chief of Forbes Media, which includes Forbes magazine, former Republican presidential candidate, flat tax advocate, author of numerous books, among his latest, Inflation, What It Is, Why It Is Bad, and How to Fix It. Steve Forbes, thank you very much for taking the call live with us here this afternoon.
Good to be with you, Frank, especially after a week where there was more green than red on the markets.
Yes, kind of 4 winners
nice
in a row.
After a couple of months.
That's right. Well, I appreciate you taking the call no matter what happens, up or down. Always great to have you with us here. But, yes, we can celebrate a bit here with 4 winners in a row. And a pretty thick news week, which I'm sure you'll be covering very closely in Forbes and all the parts of your media empire. Give us your reading of what happened this week with the tariffs very much in focus.
Well, I think a couple of things made the market say phew and sort of wait for news. One is the president is apparently in the midst of a series of negotiations, especially with the Treasury Secretary Scott Bessent, on getting some negotiations concluded. And the other one was that it wasn't going to be a big fight over who's going to head the Federal Reserve. You'd mentioned that the president backed off on trying to fire Jerome Powell. He could have ended up doing it, but it would have required a huge amount of political capital, roiled the markets, and I think the president was right to conclude that this is not the time to get in that kind of fight, especially with all the other uncertainties in the marketplace. So the hope that the tariff issue can get resolved or at least ameliorated, and the fact that the Fed is not going to be in a political fight yet, the markets are saying, okay, let's see what happens, but let's be ready if things go right, instead of always worrying about all the things that can go wrong and the massive uncertainty that has been plaguing our markets and the global markets.
Yep, there's that word again, uncertainty, and a lot of concern about trade between California and China with the big port complexes here, the ports of Long Beach and Los Angeles, and a de facto trade embargo, according to the folks there at the ports and among those who follow a business between here and there. What's going to break this log jam, and among the movers and shakers you talked to. How is this ultimately going to play out?
Well, it's very real, and that's why we're going to see a slowdown in the economy. Everyone is holding back. They can't make decisions. They don't know what the rules of the road are. And Chinese businesses are taking it hard, and it's affecting American businesses as well. And so one of the things I hopefully will see happen is getting what you might call a template trade deal. We already have a free trade agreement with South Korea. Maybe that can be tweaked and updated and released. But if in the next week or so we get several deals actually completed, signed, sealed, and delivered, I think will provide a foundation to do something with China. The Chinese are, saving face for that government is very real, and I hope that the government doesn't decide to do something against Taiwan by perhaps seizing or blockading one of the islands near Taiwan. That wouldn't be an invasion, but it would be people would see what would the U.S. do about it if they started to put that kind of squeeze on, quarantine, blockade, whatever you want to call it. And the president saying that they have been in contact with the Chinese government and that the rates are going to be coming down substantially. I think this is why you pay diplomats. The diplomats' task is, okay, these two guys are out on a limb. We don't want them to saw each other off. So how do we get this thing moved to where we can get trade resuming again? There will be tariffs on China, which will be disruptive. But the 145% we have now, that is a disaster, and that cannot continue for much longer. So I think you're going to see movement where, okay, we're starting to negotiate, so we'll reduce it sharply. It's got to be done soon because you point out the consequences are very real, and when people don't know what to do, they sit and nothing happens, and that means a declining economy.
And not knowing what to put on the price tags also is a big issue nowadays. Inflation's still a concern in all of this, and we've seen gold pop above $3,500 an ounce over the past week, hitting an all-time high, and then pulling back a bit. Bitcoin hovering above 95,000 now, and of course, you wrote the book on inflation, what it is, why it is bad, and how to fix it. What is your outlook on inflation in the face of all this?
Well, there are two kinds of inflation, as we point out in the book. One is what you might call non-monetary inflation, the kind of thing we see playing out with China. If you have a trade war or tariffs being put on, there's nothing the Fed can do about that by manipulating interest rates. That just means there's going to be prices going up. But the kind of traditional inflation the Fed can affect, which is the value of the dollar, that's the traditional definition of inflation, lowering the value of a currency like the dollar, usually by creating too many of them, but other factors. And there, I'm afraid the outlook is not good. Since 2023, the price of gold, which is the best barometer of future problems, future inflation, monetary inflation, has gone from $1,800 to over $3,300, as you mentioned, touched $3,500. But the above 3,000 is a red light flashing. And unfortunately, the Federal Reserve doesn't know what it's doing and doesn't know how to cure it. The Fed believes that you control inflation by depressing the economy, by slowing it down. And that's why people look, are they going to lower interest rates? Why the Fed feels it has to depress the economy is based on a bogus theory, but it holds sway that if you want low unemployment, you have to have high inflation. If you want to get inflation down, you have to have higher unemployment. Experience shows that's a nonsense theory, but it is the way the Federal Reserve operates. And that's why, even though the fight was avoided this week, I think in the months ahead, you're going to see a real debate about the models, the way the Fed operates. The way they operate, the way they make decisions is profoundly wrong, and that has to be addressed. And the Fed, the best thing the Fed could do now is say that they want a stable value for the dollar, and they're not going to try to depress the economy, and let interest rates be set by the marketplace, not by bureaucrats at the Federal Reserve.
On the air live with Steve Forbes, the chairman, editor-in-chief of Forbes Media, which includes Forbes magazine. And we've also seen the dollar hit about a 3-year low against other major currencies. What about this weakening dollar? What does that mean for inflation down the line?
It means that we're going to get the traditional monetary kind of inflation, the kind of stagflation we saw in the 1970s. And it doesn't happen instantly, but when you see the dollar decline against currencies that are not very good in and of themselves, the euro has got problems, the yen, Japanese economy has problems, and the pound, the British economy is barely above water, which they think is a miracle there that it hasn't declined, but it's not moving anywhere. So when you start to decline against the pound, the yen, and the euro, you know you've got a problem. People don't trust the dollar. And that's a bad thing for us, bad thing for the global economy. And the problem is, Frank, the Federal Reserve does not know what to do about it. And that's where we're going to have real problems. So we've got two big things people have to look for. Well, actually, three. One is get these trade negotiations going so we get these tariffs down. Tariff is a tax. The other thing is Congress has to pass a big tax cut bill, which they're very slow on. And the other thing is the Federal Reserve has got to work on giving us a stable dollar instead of a weak dollar, because that's just going to spell trouble. So there are plenty of clouds ahead, but this week the markets were sort of relieved that at least the worst case scenarios weren't out there, and at least one of the big problems, the problem on tariffs, is looks like it's moving towards some sort of positive resolution.
And President Trump has been outspoken in his criticism of the Federal Reserve, but did indicate that he's not going to fire the Fed chair. Whether he's able to do that remains an open question as well. But Kevin Warsh, the former Fed governor, seen as the front runner to replace Fed Chairman Powell, also speaking out today in Washington. Did you follow what he had to say? And he was very critical of the current Fed chairman as well.
He was, and the Federal Reserve has taken on a lot of powers that Kevin Warsh alluded to that had nothing to do with their original writ of providing stability, helping provide stability in the economy. And I think people are going to look very closely in the weeks ahead since Kevin Warsh is considered, as you pointed out, the front runner to succeed Powell. What exactly does he see the Fed should be doing? And one of the things one of his predecessors, Alan Greenspan, used to do back in the 1990s, Greenspan said publicly that he looks at the gold price as an indicator of whether the dollar is weak or strong. And that was a good period. Unfortunately, in the early 2000s, in this new century, he started to ignore the gold price, which soared up, and then we got the crisis of 2008. So what does Kevin Warsh think should be done? I think the market's going to look at very closely. If they get a feeling that he's going to work for a stable dollar and not try to depress the economy or artificially stimulate it, but just leave it alone and let it recover naturally, I think that you would see markets responding positively in anticipation of a better future. As you know, the markets try to look to the future, and if Kevin Warsh looks like he's on the right track in terms of new policies at the Fed, new models of operation, that would be a very, very positive thing. Because as we know, we learned, the president learned very painfully, it's not just the stock market, it is the bond market. And we have trillions of dollars of new debt that we have to finance, trillions of dollars of old debt that has to be renewed. Bonds come due, treasury bills come due. So if people are beginning to distrust the dollar, that's going to spell big trouble in the bond market. You remember James Carville, who worked for Bill Clinton way back in the 1990s, once said if he comes back reincarnated, he wanted to come back as the bond market because it can be so powerful.
Fantastic. We're on there live with Steve Forbes, which, of course, Forbes magazine has the billionaires list and updated on a daily basis. Elon Musk topping that list. Looks like his net worth went up more than $14 billion today to $388.1 billion, making news this week at that conference call, the Tesla shareholders conference call this week, the earnings call, saying that he's going to be stepping away from his work at the government and concentrating more on Tesla. What's your reaction to that news and all the noise around Tesla and Elon Musk these days?
Well, it's amazing because he's what they call a special government employee at the moment, which is a 130-day term. and that means it goes through the end of May. And so he will be leaving at the end of May. And but making that point in the conference call that he's not going to try to stay on in another capacity, or indicated he probably wouldn't, I think had shareholders happy that he's going to be refocused on Tesla, because Tesla, one reason why the stock has always been so high is that people see it more than just as an automobile company. There's a lot of new technology he's developing, battery technology that will be applicable not just to automobiles but to other uses, and some of the other things he's cooking up. So they see Tesla as a font of technological innovation, not just a traditional auto company. So as soon as he indicated that it was going to have, Tesla would soon have the benefit of his full brain power, you saw the stock, which had been knocked down to 220 or 210 or so, very low, bounced back up at the end of today. I think it was 270 something. People think, okay, good. Some good things in the future are in the offing. Again, they're looking to the future, not to the present. The first quarter results were terrible, but people see that some good things he's cooking up for the future.
And to wrap it up here, what do you see ahead for this economy? A lot of recession talk these days. Are there going to be some U-turns on some of these policies on tariffs? What do you see ahead for the economy as we try to grasp for some certainty here?
Well, you hit the nail on the head. The uncertainty around the tariffs, and so there will be a slowdown. The economy is going to slow down. I don't know what the economic theologians will call it. But it will be a slowdown. People are feeling it already. You see it, you mentioned in California ports. You see it in other parts of the country. People just you can't make decisions. You don't really like trying to play a baseball game. Is there going to be 6 innings? Are there going to be 5 outs in an inning, 1 out in an inning? Nothing happens till people have a better sense of what lies ahead. So the economy has great inner strength, but it is going to be affected by this uncertainty, especially on capital expenditures, where you may not get a payoff for 3 years, 5 years down the road, putting out hundreds of millions or even billions of dollars. You want to know what kind of environment am I going to be in? And that's why the next few weeks are so critical. Get this tariff issue off the table, get a tax bill so people know what is happening there, and then hopefully get a dollar that people can trust again, which gets back to the Federal Reserve, and then you'll see better days ahead. But in the meantime, the waters are going to be choppy. So if you're prone to seasickness, take the Dramamine or whatever you want to take. It's going to be choppy in the near future.
Bravo TV star Lala Kent holds nothing back on the Give Them Lala podcast.
It's very a lot.
You want the headline.
Here is my interview with Vicky Gunvalson. Who did the biggest number on you?
I'm not friends with Tamara anymore, which is fine.
Do you feel like you guys can repair?
No.
Stick to what you know.
Iconic.
Absolutely fantastic. It is like the Super Bowl every episode.
Give Them Lala.
Unhinged, but also amazing TV.
Get ready.
Follow and listen on your favorite platform.
Any chance we'll see you back out here in Southern California anytime soon? Any conferences planned and any new books in the works?
I've got some ideas on the terms of new projects, and I will be out in California this week at Chapman, great university there, making remarks at a conference there. So, yes, I do like to get to California, and my great regret is I'll say it, I can say it, the governance is so bad. Great state, just get the government straightened out, and California would be blossoming again big time, and it would be moving up. You know, the economy, as people have noted, is now bigger than that of Germany, but that's because Germany's economy is terrible, and or Japan's economy, I mean, and they're so terrible. Not that California is doing so well. So I wish California would get its act together on the governing level, and then, boy, you'd be paradise again. And imagine, by golly, you have teams out there, the Giants and the Dodgers. My goodness, they're going gangbusters. Unbelievable.
I know you keep a close watch on that, and I'm sure when you're at the real estate people here will tell you that really all real estate here in California is free. By the way, I don't know if you heard this, but what you pay for is the weather. So I'm sure they're going to try to sell you on that when you come out this way. And congratulations on that Chapman appearance next week, and hope to connect with you while you're here in the Southern California area. Steve Forbes, thank you very much for taking the call to wrap up another big week here this afternoon. Steve Forbes, Chairman, Editor-in-Chief, Forbes Media, thank you very much, including Forbes Magazine. Also, flat tax advocate, author of numerous books. His latest book, by the way, is Inflation, What It Is, Why It Is Bad, and How to Fix It. Live with us here, Mottek on Money on 790 KABC. 790 KBC welcomes Herb Alpert and the Tijuana Brass coming to the Dolby Theater in Hollywood, November 15th. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you are caller number 9. Call right now, 1-888-790-5222. The tickets furnished by Live Nation. Another winning day on Wall Street with the Dow racking up a gain of 20 points, settling at 40,113. The S&P 500 of 40 at 5,525. And the NASDAQ up in triple digits of 217 at 17,383. Tesla winning again today at more than $25 at 284 and change. Another jump today of 10%. The stock's been rallying since Tesla's disappointing earnings report, but the comments from Elon Musk saying that he'll spend more time at Tesla once he wraps up his work with DOGE, the Department of Government Efficiency. We saw NVIDIA also on the rebound today, moving up 458 at 111.01. Gold had a big week, popping above $3,500 an ounce for the first time, kissing record highs. Pulling back then, right now hovering at around $3,330.40 an ounce, down about $18. Crude oil hovering above $63 a barrel. Bitcoin has seen a big week, moving mostly higher this week. Right now, pulling back a bit, down about 300 at 95,000, just above 95K. Ethereum is just below 1,800, and Doge at the moment at 18 cents. The volatility index, the VIX index, the Wall Street so-called fear index, pulling back 6%. And now the latest news for you here on 790 KABC. Mottek On Money continues here in 790 KABC. A lot of focus on the Fed and tax policy this week. Tariffs, too, adding to the uncertainty. Tax policy. Will there be a tax cut, or are taxes going up? Let's bring in Grover Norquist now, the president of Americans for Tax Reform, leading taxpayer advocate, and we follow closely what's happening there in Washington on the important issue of taxes. Grover Norquist, thank you very much for taking the call here this afternoon.
Absolutely. Delighted to be with you. And we have cheerful news, not always cheerful news from D.C., but the president put down the coup. There was an effort by people around him in the White House to talk him into adopting not his position on taxes, but Kamala Harris's. He campaigned saying we're going to cut across the board. Every American who pays taxes will see their tax rate cut. And he wanted to then make that permanent out into the future. And there were a handful of staffers telling people in the Congress and others that the president really wanted to do what Kamala Harris campaigned on, which was to take the top marginal income tax rate and not allow that to remain low, but to raise it. So lots of people would get rates, but some people would get a higher rate, and their target, the rate that small businessmen and women across the country pay. They were going to raise taxes on pass-throughs, on subchapter S corporations. There are millions and millions of businesses that don't pay the corporate income tax. They pay the personal income tax because somebody started up a business and it just grew inside his own tax payment. And the president said to those people, no, you calling me a liar? You say I lied my way into office? Not a chance. I'm not doing that. Besides, I looked at what happened to George Herbert Walker Bush when he lied and said he wouldn't raise taxes, turned around, did so. He got chucked out of office.
How's this big, beautiful bill, as he calls it, coming together, and what is taking so long?
Well, it's actually much faster than 8 years ago. We didn't get that last one done until December of 2017. We are now going to have this done in the next month and a half. But before July 4th, as the president asked, but hopefully much before that. the House and the Senate have been working together for more than a year. Before the election, they started working on this, on the assumption that Trump would win and they would want to pass his bill again and make it permanent. And now that they've put out the idea that, we're going to have a hate and envy tax increase somewhere, the president said that's not happening. Now it'll be a lot easier. The House and the Senate have decided they're not raising taxes. They want the most pro-growth tax policy possible. Now, there are lots of people who have different ideas of tax cuts that you might have. There are people who want different kinds of spending reduction. We need some real spending reduction as well. There's a lot to be done. But there also, remember, this is when the spending for defense will be also agreed to, and the spending on energy, which is also a lot of revenue from energy, drilling and finding new energy and selling it, and also also immigration reform. These are all coming together. Watch for the immigration information in the next week or so, and probably 2 weeks from now, you'll see the first budget numbers out of the House.
Certainty is something that's elusive these days. So based on the cards on the table now, Grover Norquist, maybe you can tell us, based on the bill that's coming together here, what can the businesses and Mr. and Mrs. Southern California expect as far as tax breaks or a continuation of the current tax breaks, and anything else that you can highlight for us that looks like it's a slam dunk at this point?
Certainly. The expensing, for full business expensing, 100% expensing, not long depreciation schedules, that will be in there for investment. Something that may be added, I know the president wants to add it, and the House Republicans and Senate Republicans as well, is expensing of buildings for manufacturing, not just equipment. They're looking to take the top marginal tax, the corporate tax rate for domestic manufacturing to 15. I'm usually not in favor of having different rates for different kind of businesses, but if you can fit it for manufacturing at 15, that is a promise that this is a down payment for bringing everybody else to a 15% rate. So that would make us much more competitive against China and Europe. So watch for that. That's an addition to what we've already passed. That's a very good addition to have. One danger is that some people have been looking at reducing or eliminating the deductibility at the corporate level. This is not the individual SALT deductions, but corporate state and local taxes, business state and local taxes. Some people want to take away up to $400 or $500 billion of deductions there, and that would raise some money. It would also slow the economy. It would be, in effect, a 2% increase in the corporate rate as to how it hits businesses. That would be a disaster. I know from talking to the folks who work for the House leadership, they do not want to do that. They understand how bad that is for growth. So if you're a businessman, make sure your congressman and senator understands. Do not touch corporate SALT, sea salt they call it, or B salt, business or corporate salt. That's the biggest one that I think is in flux, and they will restore the tax credits, tax deduction, expensing for intellectual property, for business investment, and the lower rates that everybody got, high income, low income, middle income people, those will all be maintained as Trump did it. Nobody, including some jerk staffer at the White House, is going to tell the president that we need to go back to Biden's tax rates. That ain't happening.
The Sean Ryan Show presents Peak Points. Get timeless inspiration from the very best of The Sean Ryan Show.
September 11th happens. What is the first thing that went through your head? September 12th, I'm going back in the military.
Talk about being recruited by the cartel. How do you cope? Just learning how to find a new normal. One of the most tragic events in American firefighter history.
You know what comes after.
You have this beautiful life. You have these horrible experiences, yes, but you can do something with them for the greater good.
The Sean Ryan Show Peak Points. Follow and listen on your favorite platform.
Tariffs, of course, another big subject here, and President seems to, maybe the Treasury Secretary was indicating that there could be some discussion about it, especially as it relates to China and whether this ongoing this tit-for-tat tariff increase is sustainable or not. Those comments came this week as well. How do you see that part of the equation playing out? And ultimately, will this be an additional tax on businesses and consumers based on how these tariff numbers are coming in?
Yes, tariffs obviously are taxes. They're taxes like any other taxes. The president's pointed out that for a long time in our history, some of the only taxes we had were tariff taxes. We sold land, we had taxes on liquor and things like that, excise taxes. But tariffs were the main source. You could do that when the federal government was 3% of GDP. I wouldn't mind going back to a federal government that was 3% of the economy, and we paid for it with tariffs. But right now, the tariff move has been more damaging to the economy, I think, than the president expected. He did say there'd be some, to do while that happened. But he also pointed out that many countries have come in and said, look, we want to renegotiate. Some of them had minor things that needed to be renegotiated, but for some reason, for years, they never got done. So I think as that settles down, if we can get that settled down within the 3 months so that we don't see the large tariff numbers jump up, we have heard from American retailers that if you actually put those size tariffs on China, it'll be devastating to American consumers, and that companies said, our margins are so small, we can't absorb that. We're going to have to not buy this stuff. There will be empty shelves, not expensive shelves. There'll be empty shelves because there's no way to sell product at that higher cost. So that should probably speed up the process of getting an agreement with China as to what we can and can't agree to. I heard cheerful stuff from Vietnam and from Japan in terms of reforms there. I assume for all the ordinary reasons that progress is not something that's going to be talked about until it happens. So we're not going to get a play-by-play baseball, play-by-play report as to what's happening. There will be pleasant surprises. There may be some unpleasant surprises. I hope.
Well, we're counting on you. We're counting on you for that play-by-play, Grover. So we're going to keep an open line to you. Thank you very much for that important update. As we wrap up the week, Grover Norquist, the president of Americans for Tax Reform, ATR.org is the website. Thank you very much, Grover. Have a great weekend, and appreciate it as always for joining us live here on Mottek On Money on 790 KABC. Mottek On Money continues here, 790 KABC. A lot of attention on the Fed, inflation, tax policy, tariffs this week. Also, people are starting to think about vacations, summer vacations too, but because of all these things, fewer than half of Americans plan to travel this summer, according to a new survey. Let's bring in Ted Rossman now at Bankrate.com, senior industry analyst at Bankrate.com, who's covering all of this along with us here. Ted, thank you very much for joining us live here this afternoon.
My pleasure. Thanks for having me.
All right, we'll take it from the top here. How are consumers holding up in all of this, and how's it impacting vacation plans? It seems to be based on the survey that was just released.
Remarkably similar to last year, which surprised me. 46% of U.S. adults are planning to travel this summer. That's actually up 1 percentage point from last year. About 1 in 4 are not planning a summer vacation. Another 1 in 4 are not sure yet. 10% planning a staycation. Like I said, it's surprising that this is pretty flat year over year. We're hearing a lot of gloom and doom from the airlines about less demand and lower revenue. We're not really seeing that in our numbers. And actually, the TSA has screened slightly more passengers this year than last. So it may not be as bad as some people say. We're seeing some adjustments. I mean, definitely the growth rate is slowing. It's not the outsized gains in travel that we were seeing a few years ago, but it's not like the bottom is falling out either.
Very interesting. On there live with Ted Rossman, senior industry analyst at Bankrate.com. Of course, travel, one of the very economically sensitive sectors here. We've been hearing anecdotally because of what's going on. A lot of international travel has been curtailed nowadays. What else are you picking up here on the travel front?
We are hearing about fewer international travelers coming into the U.S. perhaps because of the political climate. Americans going abroad is the same as last year, 15% going abroad this summer. The weaker dollar is a bit of a headwind, but it's not really stopping people. One of the other things we see with travel is that, as we see with other economic data, there is this so-called K-shaped economy in effect, where the rich get richer, the poor get poorer. I mean, it's definitely true that upper-income households are propping up some of these stats. Among those who are not traveling, the most prominent explanation is we can't afford it. But that still leaves 46% who are going somewhere this year.
All right. Who is traveling and where are they going?
Young adults are big travelers. That's still some of this post-pandemic revenge travel, you only live once kind of thing. The most popular form of travel this year is domestic. Another read on this is people still want to travel, but they might be cutting some corners. You know, we're trying to square this with some of the data that airlines are telling us about less demand. I mean, it could be that people are still going somewhere, but they're doing more of a regional road trip, or maybe it's a shorter flight. They're not, traveling as far or doing it up quite as big. Felt like last year, like everybody went to Europe. But then again, travel is holding its own. Advice to people would be book early, be flexible, use your rewards points and miles. Think about kind of zigging when others zag in terms of picking somewhere in its off season or shoulder season, or flying midweek instead of on the weekend. These are some things that you can do to save money.
On the Air Live with Ted Rossman, Senior Industry Analyst at Bankrate.com, and giving consumers some great guidance here. What about credit card guidance? Going into debt to have a vacation is usually not a great idea, right? And credit card interest rates are still at or near all-time highs. Is that right?
That's right. Yeah, the average is about 20%, down slightly from a record high hit last summer, but still quite elevated. Almost a third of summer travelers are likely to take on debt. That part is worrisome. I would rather see people use their rewards points and miles, or maybe make adjustments to the itinerary so that you're still having fun, but you're not going into debt for it. That might even include a staycation. There are a lot of great things to do in Southern California. You can plan a series of day trips, or maybe a brief overnight stay. You don't want to be paying for this year's summer vacation a year from now, but you also don't want to let the summer pass you by without having that enjoyment. So maybe a road trip is a better option, or playing tourist in your local area. And don't forget about those rewards points and miles. Sometimes people don't realize how much value they're sitting on.
All right. Any movement in Washington to cap credit card interest rates? For a while we were hearing about that. Any movement in that direction?
I haven't heard anything about that lately. I know it was floated by the president on the campaign trail. More recently, Senator Bernie Sanders and Senator Josh Hawley teamed up. Interesting bipartisan connection there. They teamed up to make that proposal, that 10% rate cap. It hasn't moved anywhere just yet. I think the more likely financial campaign proposal to pass is going to be perhaps the no tax on tips idea. It seems like that one might be gaining more momentum than the credit card rate cap.
All right, Ted. Well, thank you very much for taking the call. I hope you get a vacation in this year, and appreciate the great updates here. Ted Rossman, Senior Industry Analyst at Bankrate.com, live with us here on Mottek On Money on 790 KABC. Wrapping up the week with a winner, 4 winners in a row for the stock market, and the major averages gained for the week. Tesla on a roll this week, popping another 10% higher today at $284 and change of $25.44 a share. The Dow came in for a closing gain of 20, S&P 500 of 40, the NASDAQ gaining 217. Stay tuned now for the 790 KABC News Blitz with Randy Wang. I'll be back with more at 4 Monday afternoon right here on Mottek On Money on 790 KABC.
It's part sports.
We have football on the brain.
Part pop culture.
Dennis Leary. True or false? You refuse to wear a glove with Mickey Mantle's signature on it for the movie The Sandlot.
The Red Sox blood, the Brewers blood, they run deep.
And in the best celebrity interviews.
Robert De Niro here on The Rich Eisen Show. How are you, sir?
Just got over a 24-hour virus.
The antidote is to appear on The Rich Eisen Show.
There you go. I would have done it earlier.
And you've got The Rich Eisen Show podcast.
There is a medicinal quality to appearing on this program.
Follow and listen on your favorite platform.